Describe the danger in the macro situation at the moment, Lyn.
The biggest danger is that basically for the first time since the 1970s, we have a combination of rapidly decelerating economic growth with still high inflation, and in some cases still rising inflation. And so, when you look at recent economic cycles, normally when you have a downturn, you get this, reduction in demand. You have, a somewhat overcapacity in terms of production, and so you normally get somewhat disinflationary pressures when you have that type of downturn. But because we have a lot of supply side issues, and because we had such a large increase in the money supply for many countries in the past couple of years, this is the first downturn in many decades where we have high inflation at the same time, basically a true stagflationary type of environment. And it's among the worst in Europe, but it, for obviously specific reasons related to energy security, but globally, this is something that's happening in large part tied to the energy market supply constraints there, combined with just how much currency was created over the past couple years. Over the past decade or so, which is a pretty short sample because Bitcoin is still a relatively new asset, generally it does well during rising PMI environments, so economically growth is accelerating, and it generally goes through its bear markets or its stagnation during declining PMI environments, economic decelerating environments. And there was a big wild card at this time saying, okay, well, we have a declining PMI environment that should probably be bad for Bitcoin and altcoins. But then the question was, how is that going to work with so much inflation? Which one would end up winning? And generally what we've seen is that Bitcoin tracks global liquidity very closely. So when you have global M2 increasing at a rapid rate, generally Bitcoin doing quite well as a fixed supply asset, decentralized bear asset. That's a very attractive thing to hold when you have all these different fiat currencies expanding their broad money supply very rapidly. When they start to contract, that's when Bitcoin and then the whole shitcoin ecosystem kind of starts running out of kind of euphoric buyers, starts to go through this consolidation. The CPI inflation that we're seeing now, the price inflation, that's coming with a lag from the money supply growth. And so when people talk about, say, Bitcoin not being a good hedge against CPI inflation, really that's because it was a good hedge against the actual increase in the money supply, especially in the global sense, when measured in dollar terms. And now that we're getting kind of the hangover, and central banks, or at least around the margins, trying to tighten policies to some extent, we have fiscal taps turning off. That's putting more pressure on this whole space. And generally what we see in these cycles, Bitcoin, it goes through these consolidations when you have declining liquidity environments, but of course 4 times now it snapped back very strongly in the next cycle. So it keeps having higher highs and higher lows as it monetizes over more than a decade and counting now. The altcoins generally respond very differently, where they have a similar timing mechanism where they go up very sharply during that rise in liquidity environment and then fall. But the difference is that historically very, very few of them have a second or third cycle in them. Usually they have 1 cycle, 2 cycles, and then they generally roll over for good, especially as denominated in Bitcoin. And so I'd be very cautious about touching any of the altcoins. As you point out, a lot of them would be considered unregistered securities based on how you look at the Howey test and things like that. So both in terms of insufficient network effects, Ponzi-like dynamics in many cases, I think the vast majority are untouchable, whereas Bitcoin is obviously right now it's in a very kind of tough spot. But I think as we look forward to the next cycle, I think this is a deep value zone. And one way that the two markets are interlinked is that Bitcoin is often used as collateral for companies to go then and speculate on these altcoins. So if someone puts Bitcoin in one of those lenders that they own, and then they take the stable coins or take fiat dollars, and then they go and speculate on leveraged altcoins, and then those blow up, their Bitcoin collateral gets liquidated, and then that lending company just sells the Bitcoin immediately. So you have a lot of forced sellers in the market, even though a lot of the actual bets were not on Bitcoin itself, just Bitcoin was the pristine collateral used in that ecosystem. So that's how they end up being unfortunately linked for periods of time, but it's really about that decoupling over multiple cycles. Money is a very limited design space, and so there's only so many variables that you can change to try to come up with better or worse things. And most of what we see in the altcoin space is that they claim something is better, but then they hide the fact that they had to make so many trade-offs in order to have whatever advantages that they have. And the most common thing that they sacrifice is decentralization. Whereas Bitcoin is optimized to be as simple as possible, to be as secure as possible, to be as decentralized as possible. It makes purposeful sacrifices in other areas to be that kind of hard underlying money, that hard settlement layer that other layers like Lightning and things like that can build on top of. Basically, it focuses so heavily on that whatever it can do to remain decentralized, which is the most important thing for its immutable long-term success. Whereas what a lot of altcoins come along and do is, one, they launch by kind of like an IPO, but an ICO. Unlike what Bitcoin did not do that. They just kind of put the open source program out in cyberspace. Satoshi didn't give himself any pre-mined coins. A lot of these other ones come out, they do pre-mined, they raise capital, and then they launch a project that on the surface, it looks like Bitcoin, but it's a much more centralized version. And the reason they do that is because they want it to be faster, they want it to have more attributes. But if you sacrifice the decentralization, you pretty much entirely defeat the purpose of using a blockchain money in the first place. And so a lot of it is basically different entities want to create seigniorage. They want to make a token, sell to the public, and then kind of get out of it before the next cycle comes along. And when it comes to proof of work versus proof of stake, this really goes back to the whole gold era and then the rise of fiat currencies, where money that no one can create without putting energy into it, putting resources into it, ends up being truly hard money, truly scarce money. It's not politically controlled because there's no entity that can just create more of it without expending resources. Whereas you generally see a lot of entities come along and say, we want to have our money not require resources. We want to have some entities be able to issue without any sort of cost going into it. And so that's how you have the rise of fiat currencies. And it's actually surprising and interesting. We've seen kind of a similar thing happen, accelerated in the whole quote unquote crypto space, where Bitcoin comes along. It's basically recreating, scarcity, but in the digital realm, where money has a cost to it. The only way to mine new Bitcoin is obviously to put electricity and energy into finding those new coins. Whereas proof of stake is a more circular system. It's more kind of like a perpetual motion machine, where the ledger is determined, the state of the ledger is determined by whoever has the most coins, and whoever has the most coins is determined by the state of the ledger. So you can picture it like an Ouroboros eating its own tail, and that only works as long as there's no bugs and no problems and things like that. But if it ever goes down for one reason or another, they have to manually restart it, often in a Discord channel. We see that all the time with Solana, for example.